one of the things that keeps coming up for people and that are frustrating people because people are saying the market's crashing, your portfolio is red, all this other stuff. We said this before. It's just exposing the lack of diversification in your portfolio.
Yes.
Said this time and time again. The market's doing fine. Tech is getting its ass handed to it. Question we want to try to address is, will this continue? When will it come back? What should we do about it? And I think for me, a couple things come into play. And then we'll lead into the Aunt Kathy conversation because we do want to talk about Aunt Kathy, who's dealing with the same thing you guys are dealing with.
Super wrecked.
But I think the moral of the story is we were fat and happy. We became a little bit over leveraged, managed diversification. And I might do this on my channel, not sure. But like just as a rule of thumb, I was thinking about this today. Really look at the spec stuff you're in and be real about if it's spec or not. Palantir is a spec stock.
Yeah.
Whether you like it or not, it's a spec stock.
Yeah.
Apple, not spec. So looking at stuff and looking at the exposure, and I know you guys all always want numbers. Like for me, maybe 25% of my account would be in spec. 25% of my account, I wouldn't have over 50% of my account in tech overall right now.
Yeah. Oh, yeah. Definitely.
And just keeping that as a good rule of thumb. But at the end of the day, if you can do that, you can have high conviction in these stocks, adding on dips, looking for those opportunities, but trusting the supports and resistances. Like the technicals matter more now than ever, not because they keep breaking zones, but because you got to understand how much further it can drop.
Yeah. Could not agree more. Real quick before I get into my thoughts, Daniel Camarena.
What's up,
coming
FedEx
in,
man?
Coming in from the FedEx warehouse. He said, a letter to all of us employees saying the stock market condition isn't affecting profits for their 401ks. That is because FedEx is absolutely crushing it. And it is not tech related.
Did I shout out Rajiv, or was that just in my head?
That might have been in your
Shout
head.
out to Rajiv from Singapore while we're shouting people out.
So
FedEx is a monster.
Shout out Tuesday. But yeah, I think that the Qs, the Nasdaq in particular, which is very tech heavy. You have the S&P that's 52%, I believe, weighted in tech. And I believe Nasdaq is weighted even heavier in that. We're seeing this huge rotation that we haven't seen anybody who's been trading less than 10 years. And that includes myself. It took me a while to kind of recognize this because I hadn't been in the stock market as long as some of the old heads. And, you know, the last time we saw a huge market resurgence like this was well over a decade ago. When this happens, the materials, the cyclicals, what we've been saying, are the ones that people flock to, investors flock to. And the old heads, it shows just right now that the old heads are still very much in charge. And I'm talking like the suits, the institutions and that sort of thing. They're taking all the money that they made over the last 10 years on big tech and rolling it right back into the materials. Iron's going nuts. Some of the other materials plays. Oil's also going to continue to roll. Energy's up like 36%, 38%, something like that this year. So we look at the Qs. I think that there's a case to be made that the correction isn't over. So we look at Webull right now, and I have the Qs pulled up. We're still well off that 200-day moving average. I think that there's a very real possibility that this actually could retest that 200-day moving average, which brings it back down to around 305. That's another 7% that this could correct. Now, I want to reiterate that Fatman Zoom and I both feel very bullish, and neither one of us felt as if the stock market was going to crash this year. So I want to, again, redefine or define the definition of a correction versus a crash. What we experienced back in March of 2020 when the stock market, the Dow Jones, dropped 35%, that is a crash. A 10% correction over several days or weeks is a correction. And I think that it's important to kind of distinguish the differences, but also understand that those are real possibilities. Yeah. And I think that, the correction's still very real. So while things kind of feel like they're bouncing back, there could be some rollover here too. I'm glad you defined the definition. That was impressive. I did. Yeah. I'm just going to define the definition. By making this declaration, and to clarify, this is in the comments, I was saying spec as in speculative, not SPAC. Yes. Palantir is speculative. Yeah. Thank you. Mavis got my back. Direct listing. But there you guys go. And we'll talk about more of this on the channel. This has been an ongoing conversation. Obviously,
this will be a great opportunity at some point, so it'll be continued on the channel in our live stream. So guys, make sure you like and subscribe, click that notification bell for when we go live,
yes,
so we can talk more about this topic, because clearly we all want to know, when is tech coming back.